Welcome back to Stocklabs for another market recap. We're fully into October now, fourth quarter trading. Week ended on the 7th, and yeah, it was kind of a mixed week, I would say. We were looking for a bounce. We got a bounce into midweek basically, but then by the end of the week, a lot of the gains had disappeared on a big down day after the NFP print came in stronger. It came in a little stronger than expected. The fact that they're still coming in strong is not helping market sentiment as it relates to the Fed. So, yeah, gave up a lot of the week's gains. Actually, we even hit overbought on the market on the 4th. I guess that was Tuesday. That was basically, we made some marginal highs intraday after that, but ended up selling off by the end of the week. So for the actual performance of indices, you can see they kind of held green compared to last week, but the Friday action kind of left everyone with such a bad taste in their mouth. You probably expected that everything was just down and terrible. We are kind of camped out near 52-week lows on a lot of the indices. So we're going to have to see if another bounce can get engineered from kind of these levels. Qs up 0.7, S&P up 1.6%, the Dow up 2%, and IWM outperformer up 2.3%. Crude trade blasted off again. That seems to be kind of reasserting its trend up after a long time chopping around sideways since more or less the summer, midsummer. And bonds had another bad week. So bonds are probably having their worst year in most of our lifetimes, if not ever. So yeah, bad news for bonds is bad news for the Qs, which is basically bad news for the market because the Qs are such a dominant component market cap wise of the indices. For our mega caps, what am I doing? More or less a mixed week for these guys, other than Tesla, who had a big down week. I don't remember offhand why Tesla stuck out so much to the bottom, or to the downside, but the rest, Google up, Amazon up, Apple up, kind of. Google outperformed relative to NASDAQ and S&P. The other two were kind of in line with the right major indices. Netflix down, pretty decent down week, had been outperforming mostly versus the indices, but yeah, not a lot here. Kind of just choppy and some up, some down. Tesla, big down week. As for the breadth from an industry perspective, kind of the median stock was up except for utilities. Utilities have been getting smoked, probably alongside the bond and corporate credit slides. But the rest, basic materials, they followed crude and the rest of the commodity complex. Tech, services, healthcare, financials, consumer, industrials, all slightly up on a median basis. So breadth was kind of, I guess, you'd say in line with the index performance. The indices, like we saw, finished like fractionally up. Subsector wise, we had a decent amount that were up over 5%, mostly concentrated in a lot of the oil and gas, basic material type trades. Some of the other commodities, copper, steel, they had nice weeks. Even silver was up. And on the downside, not too much was leading to the downside. Some of the REITs have been a terrible trade. They've been more or less off a cliff. And EVs soft. If Tesla's down 15%, probably the rest of the EVs are getting blasted too. So, yeah. We can look at breadth from a market cap standpoint, and let's see, 1 to 5 billion, up 3%, solid week. 5 to 10 billion, not up 15%. Okay, this must have split a million to one. Okay, 2.61% on 5 to 10 billion, 10 to 50 billion, up 2.7%, pretty good. And 50 to 100 billion, up 2.7% as well. And 100 billion cap plus, up 2%. So pretty good actually for breadth. If you look at sort of just stocks overall, even though the indices really struggled to make the tiny gains that they did by the end of the week with the NFP print. Yeah, we can look at intelligence for this week. And okay, kind of sparse. Okay, short Europe, clean energy, banks, and banks again, and inverse VIX. So, inverse VIX is kind of good to have on here because it sort of means that maybe the ranges will settle down. Instead of having these gigantic swings intraday, you might get some more calm trading. But overall, this is not like anything to get excited about. We'll see on the inverse of this. Anything is kind of flagging that should expect downside. Okay, bull China is bearish, so bearish China, bearish blockchain. There's levered individual stocks. I forgot about that. Okay, so Apple bullish is bearish, which means that Apple's bearish. And okay, but then we have tech bear shares are bearish, which would be bullish tech. Korea is bearish. Weed is bearish, as always. Consumer discretionary also bearish. So if consumer discretionary is bearish, and this is kind of tough to make anything mesh from like what you could expect to play out. But okay, since this is more of a major component, NASDAQ should be bullish this week. Although if Apple's bearish, then maybe it's more choppy than anything. In the South Korea, this is kind of a lot of the semiconductor trade follows this index. If semis are bearish, then Nasdaq's not going to hold up really. But we'll see. Yeah, it's kind of between the bullish rated ETFs and the bearish ones. The bearish ones seem a little more convincing. That they're not really that. We shouldn't be looking for a whole lot of upside in the market, although maybe we kind of are in a bit of a range here that will just chop around for a while and frustrate people a bit. Hard to say. And being kind of close to the 52-week lows, maybe you see shorts start to cover again. It's hard to imagine that a lot more forceful liquidation will continue through, but it could. The jobs number was obviously caught a lot of people off guard, and maybe they have more stuff to unload based on that. But so that is basically it. Started off okay for the week, but by the end, you sort of felt a little bit of uh, major disappointment with the market performance. I mean, I think anyone that bought anything during the week probably just blew out of it just because they figured they were done. They were done with this, messing around with this market. So, yeah, we'll see. See how stuff opens Monday, and I mean, it's some kind of semi-holiday on Monday as far as like banking holiday, but I don't think that is going to affect anything for trading. So, yeah, we'll be back at it, and we'll see if the market can sort of find a little bit of footing here, because it's really it's really looking nasty out there, and we're getting late in the year, so um, people are going to have to show some kind of returns before December, and yeah, this week could be one where they start to assert themselves on the long side a little bit, although probably it's going to take a little bit more time to develop a new trend. I mean, we've been locked in a downtrend more or less since August, and yeah. So that's it from me, and we will be back next week to recap how we are through the middle of October. Um, just manage your risk out there, and we'll talk to you next Friday or Saturday. Bye.